under the detail of the personal services income legislation, it kind of has these thresholds, and one of those thresholds is basically if the company has earned 80% or more of its annual income from just one source, then they're kind of caught squarely in the sights of these rules.
Productions here, and welcome to the Business of Art. On this channel, I dig into all of the things that we need to help us build a business around our creative work. So tips, tools, strategies, interviews, mindset, whatever I can do to help share knowledge from people who know what they're talking about so that we can do business better and make money from our creative work. So if that is something you are interested in, please consider subscribing. This video is one in a series of over 15 videos relating to tax and finance for creative people in Australia. So this is specific to Australia. It is also general advice. Always, always, always seek specific advice about your situation in your region or country where you are. What I did was ask my creative network for a question that they would love to ask a tax and finance specialist, and then I bundled them all up and took them to Matt Tucker, the principal of Creative Crunches here in Brisbane. Creative Crunches is an arts-focused.
Can I earn all of my
They
contractor
know what they're
income
talking
from
about
one
when it comes to
source?
Australian tax law, tax and finance for creative people. But again, general advice. Always seek specific advice to your situation. Matt was super generous to donate his time. I cannot thank him enough for taking the time out of his day to actually sit and answer these questions for us all. So with that, let's dive in to today's question.
Is there a rule that says you can't make all of your contract earnings from one source a year?
Not per se. I know where they're coming from. So not per se, because sometimes that can actually happen. If all of the income is coming from one source though, what I'd probably step back and say with an ATO hat on is that the ATO would look at that and say, well, hold on, is this really an independent contracting type of relationship going on, working for one person all year round? Have we not got an employer-employee relationship going on here? And the first danger point is that sometimes that is actually what's going on. And the question is, why isn't the person just properly put on payroll? It is possible to do contracts over long periods of time where that independent contractor is still an actual independent person. Maybe they've got an inherent right to subcontract to other people if they're sick and things like that. And the contract is just big and it's going to take some time. So absolutely, it doesn't mean that it's an employer-employee. I'm just saying that's where the ATO kind of naturally come from in their mind. And in that sense, I'd say defer to what I said before, that ATO contractor decision tool is probably still something really worthwhile to go back to if a person's ever about to enter into one of those type of arrangements, to just maybe check for themselves, you know, what does the ATO think about this? If they're telling me that this upcoming contract is probably more employer-employee, should I maybe just cut this off at the pass and say to that business, could you put me on payroll? But let's say it's an independent contractor. The next thing that you would naturally go through is probably those extra superannuation questions, because very, very high chance that the contract is going to be arguably substantially labour only, which means that there's probably a superannuation component over the top of that, which is very important that person is getting. So this is the kind of landscape that a sole trader is facing, which is actually not too complicated. The complication comes with the more elaborate structures in place, like the companies and the trusts, because I guess prima facie what happens there is there's nothing to stop a person setting up a company and operating through one. Not really. The ATO might hate it, but they can't really stop it from happening. So what they do say is that if you're operating through one of these more elaborate structures, where our concern is that you're doing all of this work ostensibly as a person, and you probably should either be an employee, or at least if you're an independent contractor, you would be returning this income as an individual person subject to all of those marginal tax brackets. And the more income we're talking about across a whole year, the more those tax brackets are higher than the corporate tax rate. So their concern is that a person comes in, I'm a company, I'm allowed to be, the business says, great, you're a company, we don't have to worry about any of these extra things for you. Superannuation is your problem, how you pay yourself is your problem, we're just engaging you as another corporate business. And the ATO kind of comes at that in a way saying, well, we can't really stop that from happening. So let's just start looking closely at that actual company and the person who set it up. And what they do there is subject that company to what they call the personal services income legislation. And the personal services income legislation, again, that's another deep topic, but what they're trying to get at is a person who's operating through one of those structures, but it's not a business. Like here, we operate through a company, but there's lots of people working. It's not just me. I've got staff, I've got a business premises. There's lots of these little bits and pieces which just make it just a standard run-of-the-mill company operation. ATO's got no problem with that. But if I'm just at home and I've got no other staff and it's just me doing all the work, it's just me, and it's the way I earn my income is ostensibly just personal services. There's all these things which ordinarily would just point to it being an individual being taxed. But I'm in a company, and that's what the ATO don't like. So if they think the company is in this space and it's earning its income through the personal services of one of these workers, the principal, then those rules, unless you can jump through certain hoops that are all outlined in the personal services income legislation, it forces that company to shift all of that income over to the individual. It doesn't mean that the company's actually physically got to shift the cash over, but it does make the company have to prepare its tax return on the basis that once you've got your income in the company, that's great, that's gross income. After that, the company will have its business expenses. You might find that some of those actual business expenses are limited or chucked out because of these rules. But let's say that they're all kind of run-of-the-mill standard costs that would be deductible to an individual anyway. The company will be entitled to those too. And then what we've got is a leftover amount of profit. Maybe the individual has actually put themselves on wages and paid some out in the usual way and paid some super support. No problem there, because that's ending up as wages in their personal tax return, and the ATO loves that. So that's fine. But what about all the rest of it that is trying to be deliberately parked in the company and left in there at 27.5% to sort of keep that overall tax burden down? That's the amount that the ATO don't like being left in there. And what they will do is say, this company is subject to these rules. To the extent that that profit is still in there, it needs to be shifted to the individual. The leftover profit in the company is not allowed to be left as profit in the tax return. It gets backed out, so that the company really just becomes like a bit of a zero break-even type of thing. And then over here in the individual's return, they've got maybe some of their wages, which was, I guess, legitimate. And then they've got this other lump sum amount called attributed personal services income, which is the amount that's been made to be shifted from the company out to the individual. So they make the company do that for tax purposes. So that individual, all of that income is still going to get assessed along the normal marginal rates of an individual. Where this question is, I think, is coming from is what happens if it's one of these big yearly contracts, because under the detail of the personal services income legislation, it kind of has these thresholds, and one of those thresholds is basically if the company has earned 80% or more of its annual income from just one source, then they're kind of caught squarely in the sights of these rules, which is going to make them shift it out. If a company can honestly say that less than 80% has come from one source, so I mean, it might be 75%, a very big contract, but not 100, then, well, where's the rest of the money coming from? If it's like 75% from one client, then maybe 25% is another client, or maybe the remaining 25% is coming from multiple clients. And one of the little junctures in that rule, in that body of rules, if a company happens to be under that threshold with multiple clients, then that's usually one of the particular outs that they can get by saying, look, yes, it's me. It is just at home. I don't have staff and I don't have business premises, but I do have valid multiple clients that are all unrelated to each other. I'm advertising to the public at large and a range of other things that come into play. For those clients that are in this particular space and suddenly they're faced with this one great big contract where 100% is coming through from one source, these are all the little extra rules that are potentially impacting them. But for a sole trader, they're not actually operating through one of those more complicated structures to start with. So really for them, the only real question is, as I said at the start, is it really an independent contracting relationship? Because if it is better characterized as being an employee, you're definitely going to have mandated superannuation support. That business is going to be withholding tax on your behalf. That just takes some of the stress from having to do it yourself. There can be reasons, and some taxpayers, it can be a good thing for them to just be put on payroll. But that's not all cases. We just say, go to the tool, see what it has to say. If it's a contract, labour only, it's probably going to be, make sure the super support is there. But if it's just one great big contract for a year, that's not necessarily a problem.
There we go. Thanks again to Matt Tucker from Creative Crunches for taking the time to answer these questions. If you have a tax and finance question of your own that you would like to ask, please pop it in the comments below and I will do everything I can to get that answered, or link you to one of the other videos where it may already have been asked and answered. Also in the description below is a link to the playlist that contains all of these tax and finance questions, so you can dig through there and see if your question has already been answered. And of course, it would be fantastic if you could like this video, subscribe to the channel, but most importantly, if you got something of value out of this, there is a good chance you will know somebody else who can as well. Please share it with them, tag them in the comments, whatever you've got to do, pay it forward so that we can keep helping each other out. Thanks very much. I'll see you on the next one.